Investing can be an essential way to grow your wealth. However, you do need to proceed with caution. Avoiding common mistakes is crucial for ensuring long-term success in investing. In this video, we'll look at 5 common mistakes that investors tend to make, and we'll also give you some tips on how to avoid them. Number 1 is overconfidence. Overconfidence, which is often underestimated, is a mistake that many investors make all too frequently. To avoid falling into this trap, it is essential that you maintain a rational approach based on objective data. You must resist the temptation to rely exclusively on momentary enthusiasm and instinct. Before making important decisions, it's advisable to conduct thorough research and carefully evaluate the available data. This more thoughtful approach can help preserve invested capital and foster more stable and rewarding financial results over the long term. Number 2 is underestimating costs. This can have a considerable impact on the overall return of your portfolio. These costs can include trading commissions, management fees, and other fees that can gradually erode your earnings over time. Look for solutions with competitive commissions that allow you not to pay for unnecessary costs. Remember, even small differences in costs can add up over time, so paying attention to this can make all the difference in reaching your financial goals. And number 3 is a lack of diversification. This is often considered as one of the most serious mistakes an investor can make. Concentrating all your funds into one asset class or sector and expose your portfolio to considerable risk. Diversification involves allocating funds to a variety of assets such as stocks, bonds, real estate, and commodities, just to name a few. This smart practice spreads risk across different investment categories rather than concentrating it all in one direction. This means that even if a particular sector or asset class takes a downturn, the other components of your portfolio can compensate or even thrive. Never forget that diversification is a powerful tool that can greatly improve the stability and resilience of your investment portfolio. And number 4 is taking too many risks. While it's undeniable that a certain degree of risk is inherent in investing, it is critically important to find a balance that aligns with your personal risk profile and financial goals. Investing too aggressively can result in exposure to devastating losses. Diversification helps to mitigate potential losses in certain industries and spread around your risk. Furthermore, remember, the objective of investments should not only be to maintain high returns, but also to preserve capital and ensure sustainable growth over time. Finding the right balance between risk and return is crucial to building a long-lasting and sustainable financial foundation. And lastly, number 5, choosing the wrong online broker. Unfortunately, many investors fall into the mistake of not dedicating enough time and attention to finding a reliable broker in line with their specific needs. Here are some aspects you want to be looking out for when choosing a broker. First off, you need a broker with a solid reputation in the industry. You're more likely to offer high quality service and support. Trust is also a key element when dealing with financial brokers. Next, make sure the broker you select provides reliable and easy to use trading and investment platforms. Another crucial aspect to consider are the fees and commissions associated with the broker. Look for a broker that provides a transparent commission structure. This will avoid any unpleasant surprises later on. Also, check that that broker is regulated by the relevant authorities in which it operates. XTB is a one-stop shop broker with a global presence in the market for over 20 years. We offer 0% commission on stocks and ETFs, as well as investment plans for your investment needs. Avoiding these 5 common mistakes are critical for your long-term success as an investor. Can you think of any more mistakes you commonly see investors make? And make sure you subscribe to XTB to learn more about trading and investing.